欢迎来到华尔街透视 Wall Street Review 的频道。本期内容详述 Better Home and Finance 与 Coinbase 之间里程碑式的合作。Currently, 52 million American adults hold digital assets. While many have built significant wealth on-chain, they often lack the traditional liquid cash required for a standard home down payment, a situation described as being asset-rich but fiat-poor. Utilizing that wealth for a home purchase has historically carried a steep penalty. Cashing out $250,000 in Bitcoin to fund a down payment triggers an immediate capital gains tax hit of up to 20%. Beyond the tax bill, liquidating that position means forfeiting any potential future market appreciation on those specific coins. For these investors, buying physical real estate meant liquidating the very assets that allowed them to qualify for a loan in the first place. Back in June 2025, the Federal Housing Finance Agency shifted the regulatory landscape of the secondary mortgage market. Director William Colte issued a directive ordering Fannie Mae and Freddie Mac to recognize digital assets as qualified reserves, without requiring conversion to US dollars. Following this shift, Better Home and Finance and Coinbase partnered to launch a token-backed mortgage designed to meet Fannie Mae's conforming standards. This directive linked the $3 trillion digital economy with the $18.5 trillion U.S. residential housing market. Fannie Mae maintains conservative agency-grade standards. Bitcoin is notoriously volatile. Reconciling these two required a specific architectural solution. Better developed a dual loan framework, or 双重贷款框架, to separate these risks. The primary loan is a traditional conforming mortgage backed by Fannie Mae, covering the majority of the purchase price. The second is a subordinate loan for the down payment, secured by Bitcoin or USDC in Coinbase Prime custody. Better's 10-man AI platform integrates both debts, allowing the borrower to manage their obligations through a single monthly payment. This structure traps crypto volatility within the down payment loan, shielding the primary mortgage from fluctuations in the digital asset market. Lenders manage the volatility of the digital collateral through valuation haircuts,价值折扣机制. For Bitcoin, a $100,000 down payment loan requires a $250,000 pledge. Because USDC is pegged to the dollar, in decentralized finance, price drops typically trigger margin calls, automated demands for borrowers to add more collateral or face immediate liquidation. This mortgage model removes that requirement. If the price of Bitcoin drops, the borrower is not required to add more collateral to the pledge. Liquidation is only triggered if the borrower fails to make their monthly mortgage payment for 60 consecutive days. Market price alone does not trigger a forced sale. Better added former Fannie Mae CEO Hugh Frater to its board to oversee the integration of digital assets into the agency-backed housing system. Removing the threat of margin calls allows borrowers to treat digital assets as stable collateral for long-term residential debt. Borrowers can now secure a home while maintaining their full market position and deferring capital gains taxes, 避税且有投资潜力. Additionally, USDC pledges continue to earn rewards on Coinbase, which are applied to the loan to lower the borrower's effective interest rate. Digital assets now function as institutional-grade collateral within the regulated U.S. mortgage system. The path to homeownership now reflects a financial reality where 52 million Americans hold significant wealth outside of traditional bank accounts. 免责声明：本音频至视频内容仅用于信息分享及学术讨论，不构成任何投资建议或决策依据。听众在进行投资或职业选择时，应充分考虑自身情况。